Hi, Scott Christensen here. I want to talk with you today about financial efficiency and utilizing and allocating our dollars to the highest and best use possible. In order to demonstrate financial efficiency, I want to take just a second and we're going to talk about money in a low interest savings account that is taxable, for example. Let's say that you had $10,000 in an account and you could get 2% interest on it. That's a pretty decent rate in today's market. And at the end of 10 years, if you didn't spend any of those dollars, you would have $12,190. But the problem is that not only is it low interest, but it's subject to tax. Let's say that you were in a marginal 30% tax bracket. That includes your state and your federal tax brackets. And so at the end of the day, you end up with a net $11,492 after 10 years. And so your effective yield is not 2% after taxes, it's 1.4%. Now, let's contrast that with an account that maybe we looked around, we found a place that we could get a little higher interest rate, and that interest rate was 5%. And we also found a place to position it where it wasn't going to be subject to taxes. So now that same $10,000 over the next 10 years would grow from $10,000 to $16,289. Now, that is $4,797, so nearly $5,000 more over the same period of time, just because we took the time to get a little higher interest rate and we kept the tax man away. That is 42% more money than the other process. So in effect, we are creating financial efficiency. But there's an even more powerful way to have financial efficiency, and that is by utilizing your dollars or allocating them in a way to have $1 doing more than one job. And let me show you what I mean by that. What you see on the screen here is something we call the family banking system. And it allows us to design our financial affairs in such a way that we can have $1 doing multiple jobs. And when we have $1 doing multiple jobs, it creates greater financial efficiency. What we normally do is we give our money assignments. Some of our money goes into savings accounts, some goes into the checking account, some goes into our 401k, some provides our lifestyle. But every dollar we have is typically given an assignment. Unfortunately, many of those assignments are not integrated, they're not coordinated, they're not designed to give us the highest and best use of our dollars in every circumstance, and they certainly do not allow for the highest degree of financial efficiency. So let's take, for example, virtually everyone has a car payment. Not everyone, but most everyone, okay? So we've got a car payment. Now, what if we could take our car payment and have that help us acquire something besides just a car? Something that many of us want and need, for example, is life insurance. Now, this isn't the only thing that you could do with your money, but this is just one example of having $1 do more than one job. So if there were a way for me to have my car payment provide me with a car and provide me some life insurance that I want and need, that would be $1 doing more than one job. Let's take it a step further. What if we could have that car payment provide some life insurance, but in the process of providing life insurance, we developed some cash value in that policy? Now, there's lots of different ways to do that, lots of different plans that will accumulate cash value, and there's lots of different designs. And we typically help our clients design their insurance contracts so that they create maximum amount of cash. When we create cash inside of an insurance policy, we keep the tax man away, because money that's inside of a life insurance contract grows tax deferred. In other words, there's no tax on the growth and can be accessed completely income tax free. So down the road, we could supplement our retirement with dollars from our life insurance contracts. Now, this is a very little known concept for most people, but corporate America and business owners have been using this process for a very, very long time. That is, using life insurance to create tax-free retirement income to supplement their other income. But we're taking it a step further. We said that if there were a way to use your car payment to provide some life insurance, that ended up creating cash values that then you could take out on a tax advantage basis during retirement. There's a very unique process, which we refer to here as the family banking system, that would allow you to design your financial affairs, to arrange your financial affairs in such a way that you would have the highest and best use, the greatest financial efficiency, every dollar doing more than one job, to give you multiple options over your lifetime with dollars that were making your car payment, your life insurance. As we develop the cash value, there's other things that you can do. And we teach our clients how to implement this family banking system so that you are eliminating the wealth transfers in your life and recapturing them and keeping them so that you can utilize them in the future for your use and your benefit. So we look forward to teaching you more about how to create financial efficiency, how to have $1 do more than one job, and understanding the family banking system. If you'd like more information about exactly how to do some of these things, please go to alliancegroupfinancial.com and register on our educational platform for supplemental videos that will teach you more about how this process works. Thanks for taking time to watch this today.